What's up, guys? Welcome back to another video of trading psychology. In today's video, we're gonna talk about the best thing ever happened in trading: FOMO, fear of missing out. And this topic I am absolutely guilty of, and I did it multiple times, and I documented it here on the channel. There is some days that happens to go by and I just can't control myself but just to jump in any trade. FOMO. Have you guys experienced a situation where you know where the market is drawing to and it just keeps pumping and pumping and pumping and it's not giving you any setups at all, and you just sitting on your hand? You don't want to FOMO in, but you know where the market is drawing to, but it's unfortunately not giving you any setup at all. So sometimes you just pull the trigger and jump in FOMO, and the rest is history. It goes one of the ways: it keeps pumping to your drawn liquidity, or blow your account up. And in this video, we're gonna discuss what FOMO is, why we do FOMO, and why is it bad, and how to get rid of it. So before we get started, as always, a little plug for myself. If you are trading with MyFundedFutures or thinking about getting any products from MyFundedFuture, please use the link down in the description below, and also use my coupon code Kemo to give you an additional discounts for any products that you're purchasing from MyFundedFutures, including your resets. Also, a shout out for my shop that I created for you guys. It's a trading shop. It has a lot of trading stuff: t-shirts, hats, or mugs, you name it. And I'm working on a little bit more products to put on there. So if you guys want to support me by any means, I would really appreciate it. Please use the link down in the description below to see and go check out this awesome shop that I created for you. So here in this day, as you can see, I'm on the 1 minute here, and this was on August 15, which is not too long ago. The market kept pumping up, and it did not really give any sort of setup to enter from long. And even this right here, which was a kind of maybe showing a sign of weakness and maybe started to break down. If someone would have taken a short from here, it would get absolutely wrecked. And even with breaking these bearish fair value gaps and trying to take a long, you don't really know, you're very too high in premium here that you don't really trust taking a long setup from this spot. So this is where FOMO plays in a big role with a lot of beginner traders, and even not so beginner traders, even a lot of regular average traders. They FOMO in the trade, and sometimes it serves them good, and sometimes it destroy them and get them the account breach so quickly. So for example, imagine here someone seeing this uptrend and decided to maybe take a trade from a bearish candle long here, and the trade only went their direction, only 19 bucks. It's good, but maybe they wanted $40 or a little bit more, or entered right here, and they were absolutely gonna get destroyed really quickly, really fast. So what it is basically jumping in a trade without a setup or without waiting for confirmations or any of that, just jumping in just because you see the market keeps pumping up and it's not giving you any setups. And what it is just you're afraid that you miss out for this amazing opportunity, that it keeps pumping up 1,000 points, and you want a piece of the pie. So this is what FOMO is being afraid and fearing to miss out on this opportunity and on this uptrend. And why we do it is because we're waiting and sitting on our hand for a long time, maybe starting from 8:30, which where the news hit, and now it's 10, which is an hour and a half, and we have not been doing anything, just watching the market keeps going up and up and up and creeping to the upside without giving you any setup to jump in with it. And it's aggravating and getting on your nerves of not giving you any setup to jump with the trend. So you end up like maybe jumping in the trade and jumping in with the trend because maybe the drawn liquidity, let's say it's a little bit higher, maybe like right here or something, and you keep watching the trend go up and up and up, and it's not giving you any retracement, and you don't want to like keep sitting here watching it goes up and up like that, and you decide maybe you'll jump in, maybe like light risk, and you jump in here and it gets you with like big retracement like this $60 retracement. I don't think anyone can handle $60 of a stop loss, so it will get you and you will end up to be upset. And by this moment you're like out of control. Maybe you see these two bearish candle and you decide to go short, and the market tricks you and keeps going up and up. And this is why it's bad, and it can destroy your account and your mentality pretty quickly. During one day only is enough to destroy you and destroy your mentality and psychology, and even can make you go on a tilt to blow your whole account up. If you don't have any safety protection on your account, like personal daily loss and stuff like that, it can eat up your profit and your balance too quickly from your account. So here is what we talked about. We talked about what it is, why we do FOMO in trades, because we're afraid to miss out on the opportunity and the profit that we could have gotten, and we did not take any of those trades, and the market doesn't give you any setups. Maybe you want to rush in a trade and you want to make a quick profit from it and close your charts and leave. Or if you are rushing in and want to trade by a specific time so you can go to maybe like an appointment or something or a meeting, that can have a big effect on your FOMO and your psychology. And we talked about why is it bad, because absolutely this is like ridiculous. So why is it bad? This is basically gambling, guys. If you are wanting to gamble, then the market is not for you, because the market can destroy gamblers pretty quickly. You will probably have a better chance going to a casino than going on the chart. The chart, if you see going up and you press buy, it can absolutely in a matter of second go a retracement for like, let's see how much this a retracement is. This is a 30, or this is more than that. That's $40 retracement, guys. Just with a small big candle. Small candle can get you in. This retracement is what? How much? This retracement is $62, and we did not count this one, so it's probably $75 retracement by itself. So if you want to gamble in and just want to jump in a trend while it's moving, know that this can destroy you really quickly. And I will show you an example of myself. It is a good example of FOMOing in, but it's also still bad, because that's still FOMO, and this is a part of why we do it, because maybe you've done it before and it got you profit, and you maybe see it another day and wanting to do what you just did and FOMO in again. So before we jump in on how to get rid of this FOMO, I want to show you this clip of me trading like probably 4 trades in one day. So I started with this trade. Everything looks fine. I took it based on a setup, retracement to a fair value gap, inversion fair value gap model, entry. And what happens is, and I know a lot of people can relate to those trades. So what happened here is I trailed my stop loss a little bit more, thinking that the price will not come back here again. And sure enough, the price comes and retrace, takes me out, takes all of my stop loss, and by this time I'm a negative 150, and my personal loss is $250, so I'm $100 away. So by this time I see, right after it takes me out, a big green candle out of nowhere. So this is FOMO. This is right here is FOMO. Although we did inverse this bearish fair value gap to the left, this is still FOMO, because this is the exact same trade that I was in, that I just got out break even, and this green candle came out of nowhere and I jumped at the end of it trying to continue higher. And those levels up there, those green blue lines, are my equal highs and some of the buy side liquidity resting above. And you see, by this time we took the break even line. For myself, I put a break even, respecting my rules, following all of my stuff, and this got me out break even. Did not make any of the losses, and still in drawdown for the day, and $100 way to lock my account at personal daily loss. So this is a kind of a good and bad examples of following your rules and your psychology and all of that. So this right here is trade number 3, because we already saw 2 trades. So I ended up waiting for the second opportunity, like a good trader, and following your rules and all of that. Took the trade with 5 micros, stop loss, have not even put it yet. Your take profit is up there, and this is my break even line. I put my break even line, I put it at break even, respecting my rules, all of that, and taking some profits as I go, because this is a big target now and I want to make some of my losses, right? So taking my my time here, my stop loss, I want it to trail so I can go up there with that target. It's really big, to that equal high. I saw that breaker, I mark it, and you see this big green candle reacting to it pretty well. By this time, I am negative $35 instead of $147. So this is a big accomplishment, leaving 3 to run to this equal high. And unfortunately, it gets me out at break even. This is where your FOMO starts to build up and build up and build up. And you're just, by this time, you're upset because you don't have your full profit locked in. And this is absolutely a FOMO trade right there. Yes, we did inverse this bearish fair value gap, reacting from a bullish fair value gap, but look at this. This is like the 4th trade, and then there's a 5th trade coming in, and there you go. Out of nowhere, you jump in another trade just because you're upset that it is close to your target and is getting you out every single time. And this is the 6th trade. This is not the 4th trade. This is the 6th trade right here. And this is the example of FOMO in, guys. This is a pure example of FOMO in. Yes, you know, hold on. Yes, you know that you're going to your target. Yes, you know the drawn liquidity. Yes, you know where the market is drawing to, the market direction and all of that. But you just keep going in and out of trades because you're bad stop loss, you put it at break even, or you don't know where to put your stop loss at and all of that. But this is a pure example and an amazing example of revenge trading and FOMOing in trades. Yes, you do know where the market is going to, but this is not really how you do it. You miss the move, you stop that break even and all of that. That's not really good mentality, because yes, it worked that day and I showed you a good example of it. I unfortunately don't have a recorded video of a bad FOMO example, and I'm pretty sure I do. I'm pretty sure. I am positive 100% I do. I have a couple of them, but unfortunately they're not recorded because sometimes I would be outside or away from my computer and I do a trade and it maybe end up to be a FOMO win just because I'm rushing in and I have maybe a meeting or an appointment and I get in a FOMO trade and it gets me right away out just because of this maybe big retracement or something. But yeah, this is really bad. FOMOing in trades are really bad, guys. So here's how to get rid of it and what helped me to not FOMO in trades. And I try my best not to FOMO in trades anymore. At least I'm trying my best. So what helped me is I know that when I wait and I take good setups that has all I'm looking for in one trade setup and I take that setup, a lot of times my setup end up to be right. Maybe we're delivering from bullish fair value gap, inversing bearish fair value gaps, and maybe taking my trades right after we break these bearish fair value gaps right here. So inversing it and going for small targets, and taking profit as we go. I have profit levels in mind, so maybe if we moved 20 points, I take maybe a couple micros out, and usually I aim for like 30 to 40 bucks. And of course, if we are in a level or at a position that we are not able to move or deliver it to this level or to this TP, of course I go and trail my take profit down to maybe like $10, $20, because I know we're like so high in premium, and we can reverse at any single moment to retrace down and maybe continue up or fully reverse. I don't know, right? But all I want to tell you guys is not every trade is the same trade and you will get the same profit and same stop loss levels. No, every trade is going to be unique, is going to be different. Today is going to be maybe $20 stop loss and $20 take profit. Maybe the next day you are at a really good level on the chart where we can like maybe retrace or reverse, and you know that we're like maybe going to maybe like, let's say this level right here, this news wick low, and it reversed from here, and you ride all of this up to down here where it can be very rewarding, right? So it really depends, guys, on the take profit and stop loss, but don't treat it as it's the same day over and over and over, and force trades in and trying to take maybe a specific fixed TP in, like maybe $40 every single trade, because it will get you, a lot of the times it will get you at break even more than hitting your take profit most of the times. So when it hits, yes, it's absolutely good and rewarding, but try to aim for smaller targets when the market condition is bad, and or if you know that you're maybe too high in premium or too low in discount, make sure to take your profits early or lock in some profits by scaling in. That will help you a lot more than sitting on your hand. Keep sitting on your hand and the market does not show you any setups or any entry points to enter from. And when you practice good mentality and good trading psychology, when you have days like this where the market keeps like going up and up and up and up and does not give you any setups, you know for a fact that this is one day out of 20 that the market will do something like that, and the market later or maybe in different days it will reverse or give you better retracements or good price action for you to trade and take a better setup that you actually like and prefer, other than just getting in absolutely out of nowhere, get in a trade and you don't know if the market should retrace or should keep pumping up, and you jump in a trade and it happens to be a retracement and it just reverse on you and just to retrace to that level and then keeps pumping up or down. This is a really bad situation and a really bad feeling when it happens. It just absolutely happens in a matter of seconds. You click the buy or sell button and the next thing you see on your screen is your personal daily loss lockout for the day or whatever. It's really frustrating and it's really bad, but all you need to do and all you can do is follow your rules, follow your strategy. One trending day that can go by without you taking a trade will not hurt and will not make you homeless for the rest of the day. You know, you can still keep going and let that day go, and tomorrow the market will be there, next week the market will be there for you, and it will offer better and better setups and better price action condition that you can trade in and actually get really better setups for you, other than just getting in FOMO out of nowhere and you don't know where the market should go, or expecting the market to react when you enter a trade. So right here, when you're like at this level, you don't know if the market will continue up or reverse. Same thing right here, you don't know if the market will continue up or reverse or retrace. So yeah, guys, that is it for today's video. If you enjoyed today's video, make sure to like and subscribe to the channel. We're very close to 1,000 subscribers, guys. We're very close, and if we hit 1,000 subscribers, I'm gonna have a huge giveaway for you guys and a huge surprise. So let's keep pushing forward. Let's keep building this YouTube community up, and thank you all so much for your support, for your love, for being the best community here on YouTube. Thank you all so much for watching. I will see you in the next trading psychology video. Peace.